Hello everyone, it's Red with RedDragonLeo.com and StockMarketBloggers.com. We did have a nice little sell-off today. I have to give Robert credit for that one. He did call that. I really was surprised. I thought that it would be a more of a positive close, maybe not necessarily a big rally day, but I did think that today was going to be a positive close. But they tanked it and rebounded about 50% into the close, as you can clearly see. So now the question remains: this pattern down and this move up, is this a bear flag? Does that mean we're going to fall again tomorrow? That's a good question. I really couldn't answer that. I will say that most bear flags are a move down and a sideways consolidation, more like an L. The way it goes with that is the sharper the rebound up, the less power the bear flag has. And as you can see, that this down move and this up move right here is a pretty sharp angle that it came up. So in that case, it gives it lower odds of a bear flag playing out. It doesn't mean that it won't. It just means it's lower odds. I mean, sometimes it will, sometimes it won't. That's all. So, but technically, yes, it's still a bear flag. So, you know, we're not sure. We don't see a capitulation move here with a nice bottoming tail, and that has me concerned. And we haven't went down and hit well, I guess we have here 1295. Now, I was looking actually for about 1290 was what I was looking for to be hit, because of the VIX and also because of the major support line not drawn on this chart, but I'll pull it up here in a second. You can clearly see that the market's trying to recover. Now you've got two smaller histogram towers. There's still no big deep one like this, so the selling pressure is drying up, as you can clearly see, and it's trying to go back up. There was some news that they're going to be voting on a bill or something, and that bill is let's see, can't remember what it is now, but it's a bill concerning the, I'll pull it over here for you. I can find it. It's a bill that Obama basically denied the previous time by vetoing it. It's here. It's a bit called Cut, Cap, and Balance Act. And reading this story here, basically Obama did not agree with it the previous time and said no to it and vetoed it. So, but they're thinking it's going to pass tomorrow. So the question is, now that the market's been selling off, of course we all know it's planned and all, but is Obama going to step up to the plate again and veto it and cause the market to continue selling, or will he simply step aside and not say much of anything and just kind of let it be passed, let it go to the next step? Which, if I'm reading this correctly, it will be simply the House that votes for it, which is only part of the process. You have to get it through the House of Congress as well as the House of Senate. So, and I believe that this one, 218 votes, that would be the House of Congress, because there's only 50 senators, one for each state. So, I'm sorry, 100 senators, only two senators for each state. So there's only 100 period here, 50 states in the United States. As far as congressmen, there it's based differently, and I don't know how many there is for sure, but I think it's maybe close to maybe 300 or more. I don't know how many congressmen there is, but some states like Florida and California get a whole lot more congressmen than other states. I think it's based on population or something like that. So anyway, this is got to pass through Congress first. So if it gets passed, Obama might just step aside and simply allow it to happen, because obviously he's been pressuring them anyway because that's what he's being told to do. And if they pass it here, the market should get excited and start to rally. And it's in the cards anyway, you know, in the charts and everything. It's basically saying that we're way oversold, we should rally. So with that being said, assuming it passes here again and Obama just does nothing, then the market will get excited and rally, and then it will have to go to, I guess, the Senate for approval after that. I'm assuming that's how this bill works. I'm not a politician, so I'm not positive on that, so correct me if I'm wrong. But I do see it rallying tomorrow. That's just going to be a reason to rally. And no, I want to answer this question right here. I'll be on this site always. This is my main site. The stockmarketbloggers.com was started, you know, to promote other blogs. I will be there in the chat room on a daily basis as well as on this blog. So don't think that I'm leaving this blog. There'll still be this blog and the post and everything on a regular basis. So everyone is welcome to go to the chat room at stockmarketbloggers.com/chat. So you look down there in the bottom left-hand corner as I'm hovering over this in the bottom left. It's not showing it all, but it's /chat, and it will take you to the chat room. And we've already had some people in it today. As a matter of fact, some people stopped by, and we had a little chatting. Here it is. In the other browser here, you can see the chat room. If I go full screen on this, you can see the page, and this is the chat room at stockmarketbloggers.com. I might remove this. I don't really see that this is much use, and it's not, so you have to give me your thoughts on that, but I don't think it's of much use. But anyway, be sure to stop by and check it out. If you're one of those people that wants to chat during the day, I will be there, plus the blog, of course. So, is it going to go just like this pattern? I don't know, but I do believe it's going to be some type of ABC move up. Could actually be a 5-way move up if it rallies for 2 weeks all the way into August and goes up here and puts in the 138.86 fake print, which again is about 1388 on the SPX. I don't know if it's going to go that high or not, but we have our full moon turn date right there on the 30th. No, I'm sorry, this was the full moon. New moon turn date right there, which coincides with the August 2nd deadline. So maybe it gets passed in the House of Congress and goes up to the House of Senate and doesn't get passed, or Obama vetoes it, and that's what causes it to tank. I don't know, but we all know it's planned, it's staged, so it's coming. So it's, you know, just you know, get used to it. It's all, it is planned. So let's pull down this other chart here on the VIX. Did want to show you this. Let's see here. And we'll look right here. As you can see, this major trend line from here, this goes back, well, it says 2 years there, but it's not really 2 years. It's going back December of last year all the way to now. And so I drew this long trend line right here. It connects it all the way right here to this point. Now, did we hit that intraday? I don't think we did. Let me see here. And then this one here goes to here, and of course we've already broken out of that one. Let's zoom in here on this. No, we did not quite hit that, as you can see. So if we go in a little closer on the 60-minute chart, you can see how important this trend line is. So will we hit it tomorrow, or is it done? I don't know. To me, it looks like it's curling over, which on the SPX and the ES, the market overall, the Dow, all of them that are putting in that bear flag, you know, is it a valid bear flag? Will it play out, or will this continue to roll over? I can tell you if that bill passes, the market's going to get excited, and you're going to see a big short squeeze, and the bears are going to get taken to the cleaners. This is a very, very important trend line. It's very, very important, and it's a major one. I think it's going to fall and drop back for it's over all the way down here 22. If it breaks that on down to here, I don't know if it's going to go that far all at once. Of course, it might take a while to get down there, but I do see it coming down. So if you look at the SPX, same thing here, and you can see again this major trend line dates back to May, the May 1st, May 2nd top, which is the end of the Legatus pilgrimage that they had from April the 30th through the 1st of May. As soon as the day opened right there, it sold off all this time before it finally bottomed. So it sold off for a month and a half of selling right after the Legatus pilgrimage was over with. So just don't forget that this October 23rd is the next ending date for the Legatus pilgrimage. I expect that to be the crash of all crashes. Okay, looking at this on a daily chart, a 1 year chart, or actually I think I'm going to go to a 2 year chart to get this on here. Yep, a 5 year chart. I've showed you this before, but we're going to go to it again. There it is, all the way back here to 2009. I drew both of these trend lines. One of these trend lines is closing price, and the other one is the low, the 666 tail low, and they both come up here and they either touch closing prices or the tail lows again. So they're very, very major trend lines right here, and that's one of the reasons that we bounced. I went over this in the other video, but you can see again why we bounced at these levels and why we will continue. So there's this one, which is the closing price low, and then here's the low tails. So even if this bear flag did play out, I don't expect it to go below this 1290, 92 area, something like that right there. And you can see where it says the start was, and that one's on the 666. Yep, you can see where it started the trend line. So even if this does play out, which I'm not so confident it will, it may or may not, it is trying to get back above this trend line right here. That's an important one from the top. You can see it butted right up against it and closed right up against it until the close, and could not go above it. And you can't expect it to go above it because it's major resistance. So how do you go above it? Well, you gap over it. You do it in the morning. It's what you do. You gap. And so if we're going to go above it, I would expect it to gap over this and over this. If you see a gap open to 1313, that thing's going to run, and it's going to run all the way up to at least 1322, and possibly it breaks further. That might be it for the day, but if it gets to 1313, expect it to run up here before it runs into resistance if they gap it to here. So, and that's how you get over this stuff. You gap below support and you gap above resistance. That's how it's done. So there is your SPX, and same thing with the SPY. Same thing with the SPY, exactly the same. 130.61 there. So you're going to gap above this easily, and you'll probably gap above this. So if you're looking for a gap in the morning, if they gap it up, and I don't necessarily mean it's going to be tomorrow, because the vote is tomorrow, so it might not happen until possibly Wednesday. They gap it open then, and then if they gap it here, then you can expect them to run it all the way up to here. It's a big run, but we're going to see a big short squeeze coming as soon as that passes. So that is it for that, and let me show you the rest of the charts here. Put this back up here. Okay, looking here on the rest of these charts, you can see the same thing. It's a wedge, a falling wedge, and it's going to break out at some point. Whether or not this falls back down and hits 1292 or not, and this fulfills the bear flag, that's possible. If it does, then I expect the next time that would be tomorrow and if it falls down there, then I expect it to come right back up and hit this resistance level and then end the day like that, something like that, and then gap above it on Wednesday and run, assuming that the vote gets passed, and I do believe it will. So same thing, draw the trend line right here. So that's really pretty much it, folks. I mean, you know, I wasn't sure what was really going to happen on Monday. I kind of thought we were going to have a positive close and gap up, but they went ahead and gapped her down and tried to come back again. So, but I still think we're going to have a big rally. So it's coming, and how high it goes, I don't know, but I wouldn't be surprised if they go to that fake print. If not, then they're going to hit this line of resistance here, coming in around 1350 area. That's all the way from the top, not drawn here on this picture, but it's here on here again. I'll pull it back down here for you. The resistance line coming down. Let's get off the 10-minute chart, go to the 60-minute chart, and you'll see it. The resistance line is, where is it? Let's go to 1 year. I think it's this one here. Yes, the closing price there. So closing price there, it drops. As it keeps dropping throughout the days, by the time it gets up to there, it'll easily drop to about 1350. That's a major line to go over. But if you can get over that, then rest assured you're going up to the 1388. They'll take that out in a heartbeat. But they got to get above this line. So, okay, so that is it, gang. I hope everyone does still comment here on the blog, and I hope everyone that is able to go and do, you know, if you're able during the daytime to chat, I hope y'all go to the chat room and chat around and just have fun. That's it. Good luck, everyone.